Okay, good morning, folks, and welcome to Market Wrap for yesterday and a morning update to talk about the events that unfolded overnight since the markets closed. I was out to dinner last night, and I didn't even realize what was going on until I got home and I checked the futures. So we had an attack by the Israelis on Iran, their nuclear sites, and I saw one image of a residential area being hit. Whether or not that residential area was being used for military purposes, I'd have to assume that. I don't think it was targeted, but you never know nowadays. The question I had immediately was, where were we at in terms of a retaliatory strike? And it appears as though we already have an Iranian retaliatory strike. The question is that it? Apparently, no U.S. forces were involved, at least overtly. I did not see any attacks on U.S. bases. I know that I think Baghdad airport was hit over in Iraq. We kind of saw this coming. We saw the warnings coming out from President Trump about things could get ugly over in the Middle East. We saw the State Department talk about certain areas of the region that should have non-essential personnel leave. And we saw, of course, the price of oil skyrocket yesterday. And I guess that's where we'll begin today's commentary, which was going to be by and large on the futures action. So let's take a peek at crude oil. Wow, what a move here. Up over 7.5%. We're back above $70 the barrel on light sweet crude. Now, I haven't looked at the dollar yet, but I'm willing to bet that the dollar is up because I suspect, and it is up, I suspect that what has happened here is that the reason why this happened now is due to the U.S. dollar, its weakness, its dominance, the reserve currency, and the fact that the petrodollar was being usurped by China, other countries, and we probably made a deal, which we've been talking to the Saudis quite a bit lately, made a deal about getting rid of Iran once and for all because they are a threat to Saudi Arabia. Saudi Arabia will probably take U.S. dollars for purchase of oil again. And I think there was even conversation about that a month or so ago. So it appears as though this is part of a deal to keep the U.S. dollar as the petrodollar and to prevent any other foreign currency rising against the dollar. That's my guess. It kind of makes sense because you got to figure out, or ask the question, I should say, who benefits. And clearly the Saudis benefit from this. Let's move on. Let's talk about the price action of gold. Gold up 1.25%, trading just off the highs of the session. The NASDAQ 100 down. This was worse. It looks as though it could break lower, though. We're holding on to support at current, but this is a bear flag setup, 4-hour time frame, so not insignificant of a time frame. We're not seeing a ton of selling here. It's a coin flip, 50-50, which way the sellers are going on this 4-hour bar. So might we break out? Might we recover? Sure. The S&P 500 down 1.19%. Again, this was measurably lower when I first saw this last night. Bitcoin down 2%. Big move here on Bitcoin. Let's take a look at some pre-market action on some of the stocks that we're involved with. Boeing, we have a little bit, let me correct this. We have a little bit of, not a little bit, looks like we may break lower here. We have some selling pressure relative to yesterday's close. Not huge. But you could argue that maybe we're creating a base here. You could have made that argument here yesterday, but we failed to hold it. I'd be a buyer at lower prices here. I don't want to buy above 200. Now, UNH, which has been paying us this week in the pre-market, this I already looked at. We're kind of taking it on the chin here by about $5. We're holding support. I wouldn't be the least bit surprised to see a reversal day here, some buyers moving in, because the stock has been under accumulation. It's a staple. What else do we have here? The banks did very poorly yesterday. And in the pre-market, they are down yet again. I think it was Talon that put in the forum. Wells Fargo had a weak day yesterday. I looked for news. I didn't see anything. Maybe I missed it. But very, very bad price yesterday on Wells Fargo. There's still no news here. And there was even some weakness on Citigroup as well, which appears to have stabilized. Let's check in with natural gas, and then we'll go to the closing charts. I'm not going to go over all of them. It's early. You guys got to get to work. And a lot of the charts are going to be really dated now. Natural gas broke support. We're up by just shy of 1.33%. But we are down below some resistance levels and the 21 period EMA on a 4-hour time frame. But we could be stabilizing here, and there is our new trading range on natty gas. All right, let's go to the closing charts. Now, valuations, 36.94 on the Shiller, and this is what I'm really interested in here, is probability. Let's go to July. That's up to 25 from 18. September, now up to 78% probability of an ease, and October just shy of 90. So they're pumping in a greater probability of a move in September and October. July still a no-go. Now, I want to talk about bonds a bit here. Bonds saw a breakout yesterday, and it looks as though there's more fuel left in the tank for these shares to move up higher, whereas yields, they gap lower and will probably remain lower for at least the short term because money is going to flow into the bond market, driving down yields. We didn't go over yields and bonds. Let's go back, see what they're doing in the pre-market. Yeah, the 10 years down yet again. That means that bonds are being bid. Let's bring up the TLT. So if you're Scott Bessent, the Treasury Secretary right now, these attacks are working for you. You're getting liquidity in our bonds. Yields are going lower. Dollar gaining strength. I don't know how he views that either positively or negatively. Now, moving on to the Dow Jones Industrial Average. I mean, yesterday's price action here was extremely bullish. We've been holding 42,750. Were it not for the news, we should have moved up higher. But here is the problem that I always talk about, and that is volume. Both volume to the upside and to the downside has been weak. But if you want to break through all of this overhead supply and most importantly, hold it, ideally you're getting institutional accumulation. And we haven't seen it. Now, the vibe I'm getting from the news headlines that I've gone over is that this is probably a tit for tat. It's probably not going to last that long, but I don't know. I don't know what I don't know. Initially, my knee-jerk reaction was, okay, we have to wait for the Iranian retaliation that could keep pressure on the market. The problem with that is that we've already seen some retaliation out of Iran. So I wouldn't be the least bit surprised today, absent some threats coming out of either Israel or Iran, for this just to get shrugged off and for equities to recover. I'm not seeing the expansion. I didn't see U.S. military personnel or equipment being used. Therefore, it doesn't look like a wider scale. It just looks like a tit for tat that we saw several months ago driving up the dollar and gold together. What are they doing today? Doing the same exact thing. Geopolitical risk. As for tips, they're trying to break them out. With yields pulling back, they can break out. And I'm interested in why this is looking so bullish. Let's take a look. And I didn't analyze closely yesterday's PPI, but from what I understand, the PPI was a good number, and it was. But the headline that I read, and we always want to be careful of headlines, the headline that I read was that producers were eating a lot of the costs and not passing them on to the consumer. But I'm not seeing that here. I'm seeing a miss, meaning a good number on the PPI, half of what was expected on the headline number at the core, meaning ex-food and energy. We came in a third of what was expected. So the market could be saying we don't believe the numbers coming out of the government, which is entirely possible. But it's just strange price action where I would have thought that tips would have gone down. They didn't. Initial jobless claims did spike up. That is recessionary. And I shouldn't say one report. Let me rephrase that. The rising unemployment, initial jobless claims, this is the highest number that we've seen in quite some time. And we beat what was expected. So it's an indication of potential recession. Therefore, why would tips rally? So I'm a little bit suspect of this price action here in treasuries. And volume is good. Tips, not treasuries. Volume is good. The dollar, gap lower. We're moving back up here today. Are we putting in a W formation? It's entirely possible. If we do have a new petrodollar, it's entirely possible that we stabilize here, especially if inflation cools. Bitcoin, we've already gone over. But let's refresh here as it's traded. We're off the lows of the session. We're precariously close to testing that $100,000 mark. So I would not be buying the dip. We'll continue the dollar cost average in here. Taking a look at VIX, we've been talking quite a bit about this, how it's been stabilizing, how we've seen some bullishness on the indicators. Not a lot of bullishness on price, which matters most. There's no volume to speak of here, so we can't talk about that. But this has been indicating that there's something brewing out there. We've been talking about it, and that's why we drew these lines, indicating that there's something amiss, and sure enough, this is going to spike up higher today. Dow Transports moved lower, reversed off of support, light volume yesterday. Dow Jones Industrial Average, we already spoke about that. Let's move on. Why? Again, similar to the Dow Jones, where you had a bullish reversal bar consolidation at 600. We're going to open below that mark today. The question is, do we close there? If we do not close there, I believe that what we're going to see is a breakout to new all-time highs in the coming days. Because if this doesn't take the market down after we've been putting in a melt up on volume, which has not been wonderful, and we gap lower, say down to 595. Let's go to the SPY now and see where it's trading. Yeah, we were down as far as 591. At current, we're at 596.81. I'm sure in the regular hours trade, we're going to test 595. Does it hold? And if it does hold and we reverse and we break out above 605 today or Monday, we're going to all-time highs. Simple as that. Now, if we close down below 595, then we have more serious problems. You got to keep an eye on the headlines. If there's more of a threat of retaliatory strikes by either party, Israel or Iran, then this market can see more pressure because what's happening? Oil is spiking up by over 7%. That is in and of itself inflationary. I may have just answered my own question as to why TIPS just rallied yesterday despite weaker inflation data. Qs, a reversal day. We didn't close at the highs of the day like the other indexes. Volume, again here, horrific. Let's see what we're trading in the pre-market. I think we could head down to 521. Let's see where we're at. QQQ, we're down as low as 522.30. Not bad there, Bob. But we have since recovered a lot of those losses. That doesn't mean we can't retest in the regular hours session. You know, there's only so much volume that you're going to pump through these markets in the pre-market. You need the liquidity of the normal hours session to really unload a big position if you're a institution concerned about getting a good price. And if you're selling right now, you're not going to get the best of prices on your orders. Skipping to the banks, you know, I have to say, I plead a bit of ignorance here. When I looked at these charts yesterday, the XLF was down, and I didn't see the reversal day. Not that I follow the banks all day long. I didn't see the reversal day. We reversed strong here on the banks, and that's another reason that would indicate that if we see a general market recovery today, that the banks could be breaking out to new all-time highs in the coming days and weeks easily. It's just so hard to predict what are the next steps out of these countries, Israel and Iran. But I think that what's going on here is that the United States, Israel, and Saudi Arabia are seeing what's happening over in Gaza. That real estate, they want a non-militarized zone, at least for the Palestinians. I hate to use this phrase. I'm not going to use the phrase. I'm going to pull back on it because I don't want to be hyperbolic. They want peace of mind in that strip of land, finally, after all these years. Whether it's right, wrong, indifferent, I'm neither judge nor jury. I'm just saying what these guys are looking at. And if they don't have to look in the backyard of Gaza, or if the Saudis don't have to look in the backyard at Iran any longer, that's a huge bit of peace of mind. So I think that that's what people are thinking. Those entities are thinking. U.S., Israel, and the United States, we want out of the Middle East. Before we go, the Israelis and the Saudis certainly want Iran taken care of, and our dollar gets stabilized. Let's move on here. Let's talk about technology, which saw a breakdown a couple of days ago, but continues to melt up here. And volume was good yesterday. There's no reason why we can't see a breakout to all-time highs here. So, if anything, today I'll probably be looking at the price action. If we stabilize quickly, I'll probably look to add to longs and possibly lighten up on shorts, taking advantage of the weakness, because I'm just getting the vibe that this market wants to move up higher. Strange with the futures action looking the way they are. And my attitude could change as the news flow continues. So as it stands right now, from the news I've gone over, we already have our tit for tat. Israel attacked Iran. Iran attacked Israel. Is that it? That's the final question. Are they done? And I can't answer that question, obviously. All right, folks. Everybody have a profitable trading day. I'll talk to you soon. Be well.